Welcome, grade 12s. Yes, you are with Ashraf Patel, and we are discussing financial statements in terms of the statement of comprehensive income. Remember, sometimes we also refer to it as the income statement, okay? So make sure you are aware of the terminology. The latest terminology, it's called the statement of comprehensive income. Now, if we look at this statement of comprehensive income, firstly, let us identify the reason why we prepare an income statement or a statement of comprehensive income. I'm going to use the term interchangeably, so whatever I talk about, remember we're talking about the same thing. In order to determine the net profit or loss for the accounting period under review. So you're working within the parameters of a financial period. Keep that in mind. What is the layout of your statement of comprehensive income? Obviously, you would start off with your sales. From it, you would subtract your cost of sales, and that would then give you your gross profit. Okay? Now remember, it is important for you to know the layout of your statement of comprehensive income, because you're not sure whether the layout will be given to you in the exam or you have to complete the detail. Then, once you've determined the gross profit, now it's also possible that your gross profit may be determined by means of using a markup percentage. Keep that in mind. Very often, you find that examiners use the markup for you to determine either the sale or the cost of sale, right? So keep that at the back of your minds, that using the markup, you must be able to calculate either the sales or the cost of sales. Now, from your gross profit, you add your other income. What are we referring to here? Here we are referring to your commission income, rent income, and I'm sure you can discuss with a friend and think of other items that could be included in this section. Let me give you a minute to discuss with your friends as to what else you could have as part of other income. Okay, I am sure that you have seen that the other possible items that could be included under other income could include bad debts recovered, one. Number two, so let's make a note of that. It's your bad debts recovered. That's one item. The second item that you could include under your other income could be your trading stock surplus. Okay? I'm sure you've discussed that one. And yes, the third item that could appear under this item here could be your provision for bad debts adjustment. But which one? When you are reducing your provision for bad debts, your adjustment account becomes an income and could be included under other income. So keep that in front of you. Which are the possible other incomes? Okay, that would then give you your gross operating income, and from there, you're going to subtract your operating expenses. Now, obviously, your operating expenses are many, and surely some of them would include salaries and wages, water and electricity, stationery, remember grade 12's, director's fees, audit fees. The list is endless. We're not going to go through each one of them. Obviously, those are items that you would include under operating expenses. So your gross operating income minus your operating expenses will therefore give you your operating profit. Now, sometimes you are given a financial indicator like the operating profit as a percentage on turnover for you to be able to calculate your turnover. Let me repeat what I'm saying. Sometimes you are given a financial indicator like your operating profit on turnover, and you have to use that indicator to now calculate your turnover. I'm just making you aware of the possible types of questions that you could be faced with in the exams. Right? From your operating profit, you now add your interest income. Amongst your interest incomes would be interest on investments, interest on fixed deposits, interest on current bank account. Any form of interest income would be accumulated in the term interest income. Remember, you always have to show your calculations in brackets. Very, very important. But more about that when we actually do the income statement. This then gives you your profit before interest expense or financing cost. Right, now, what would you include under your interest expense? You would include interest on loan, interest on your bank overdraft, right? And the interest that was charged by your creditors. So any interest that we have paid or interest that we have accrued would be included with my interest expense. So this, having brought in your interest expense, this will give you your net profit for the year. Remember then, we bring in our taxation. Okay? And after our taxation, that will then give you your net profit. So you will have your net profit before tax, you will then have your taxation, and then your net profit after tax. Okay, coming to the net sales figure. We're using our net sales figure in order to determine our gross profit. Okay? Now, this adjustment is never ever told to you. Which one am I referring to? I'm referring to the fact that you have to subtract your debtors' allowances from your sales figure. This adjustment is not a written adjustment in other information. It's something that you as an accounting student needs to know, that immediately when I'm working with an income statement, the first thing that I do is I subtract my debtors' allowances from my sales in order to arrive at my net sales figure. Please don't forget, or let's rather say, remember to do that when you're working in an income statement. Interest income and interest expense are shown below the financial statement as separate notes. Why is that? Why? Important question. Interest is shown separate on the income statement because it deals with income that you have earned from outside sources like banks, finance houses, etc. And it is not an operating expense or an operating income per se. It is income that you have earned as a result of your investments. So therefore, it's not income from normal business operations. It is not from operating activities. Interest income is shown as note number 1 to your financial statements. When it comes to interest expense, it's also shown separately in your income statement because interest expense is not an operating expense such as stationery, repairs, etc. Interest expense is paid to persons or institutes who lend money to our business, and therefore it is not an operating expense but a financing expense, a very, very important item that you need to take into consideration. And interest expense will also be shown as a separate note to the financial statements. So you've got note number 1, interest income, and note number 2, your interest expense. The operating profit therefore shows you what you actually derived from the business operations. And obviously, you're going to add your interest income and you're going to subtract your loss, depending on whether the company had made a profit or a loss. Okay. Now, I want you to take 2 minutes, discuss with your peers, discuss with your friends on these adjustments that you see in front of you. Go for it. Okay, grade 12s. Now, remember, I'm sure you've discussed some of these adjustments with your friends. Obviously, we're not going to discuss all of them. Let's just take 1 or 2 and just give you some key concepts that you need to take cognizance of. Number 1, remember that depreciation is what we refer to as an imputed expense. Now, sounds like a very fancy word. What does it mean? Depreciation as an imputed expense means that you make a book entry in your records, and this entry does not affect the flow of funds. Very important for grade 12 purposes, because later on, when we do the cash flow, you will see what we do with depreciation. Remember, yes, it's an expense, an operating expense, but it is an imputed expense. In other words, it does not affect the flow of funds. Contra entry, debit depreciation, credit accumulated depreciation. Question arises, what type of an account is accumulated depreciation. Accumulated depreciation is a negative asset. Yes, what do we mean by that? By that we mean it decreases the value of your asset. Right, let's take another one for example. Let's take income received in advance, also known as deferred income. Immediately you identify that your contra entry will always be a debit to the relevant income, right? Whichever income you're dealing with, and a credit to income received in advance. Now ask yourself this question: what type of an account is income received in advance? Remember, it is a temporary liability. Why? It's going to feature in my balance sheet under trade and other payables temporarily, because come the first day of the new financial year, then you're going to have to do what is called a reversal, right? Let's take another one: consumable stores on hand. Immediately identify your double entry: debit consumable stores on hand at the end of the year, credit packing materials or stationery or whatever else you are dealing with. Where does consumable stores on hand appear in my balance sheet? It appears under inventory. Reason? It's a verifiable item. If the auditors walk in and they want to check your consumable stores on hand, you direct them and say, there's the stationery cupboard, there's the packing materials. You can verify it by means of a stock take. Right? Carrying on, if we look at income tax, remember, income tax new to a company, what's the entries that we process with regards to the adjustment? Very simple: a debit to income tax. Always remember this entry: a debit to income tax, and a credit to your SARS income tax account. Now you will notice that by processing this entry, your SARS income tax account would end off with either a debit balance or a credit balance, depending on your provisional payments. Grade 12s, remember that your income tax entry is only processed at the end of the year, whereby we debit income tax, there's my expense account, and a credit to my SARS income tax account. Obviously, like I alluded to earlier on, depending on what happens to your SARS income tax in terms of its final balance, it would either appear as a trade and other receivable or as a trade and other payable. So we've discussed a few of these key concepts, but we're going to take a short break. Don't you stray or go away, because we're going to be back with you in a jiffy. Welcome back, grade 12s. I'm sure you had a quick breather, and we're ready to take on the questions based on what we've discussed in our earlier segment. Right, what are we given? We are given a pre-adjustment trial balance, right? And from this pre-adjustment trial balance, we are expected to complete the statement of comprehensive income based on what? Based on the following information and adjustments. Okay, so you see where we're coming from. We're given a pre-adjustment trial balance. We are expected to take the adjustments, make the necessary adjustments on my answer sheet. Okay, so in that way, let's go back and say, right, the first thing that we need is our sales figure. And where am I going to get my sales figure from? Very simple. Go to my nominal account section, and there's my sales figure, 5,970,000. What should I do? 5,970,000. And I've put the figure in a bracket, not as a final figure, but as a bracketed figure, 5,970,000. What did I say earlier on? I'm sure you are shouting out the answer, and the answer is, yes, that's right. Subtract your debtors' allowances. Go back. Identify your debtors' allowances. Do I have debtors allowances? Certainly I have. 70,000. Immediately I say minus 70,000. Clear? Did anybody tell me I must do this adjustment? No. It is something that must happen automatic. Look for debtors allowances, subtract it from your sales, and you know then you are ready to go, you are good to go with the adjustment. Right, what was my adjustment? A debtor returned defective stock with a selling price of 15,000 Rand. A markup of 50% is used, right? The stock was then returned to the suppliers, but no entries have been made. Right, the moment you are given a markup, this is what is expected of you. Cost price, markup, selling price. My cost is 100, my markup is 50, and my selling is 150. What do I want to determine? Firstly, the selling price of the stock was 15,000 Rand. The contra entry for that one is, yes, a debit to debtors allowances and a credit to debtors control. This means, therefore, that I now need to go back here and say minus 15,000, which was my further debtors allowances, isn't it? But at the same time, because there was a physical return of goods, I also have to adjust the cost of sales. And this means, therefore, that I need my cost of sales figure, which I'm going to get from my trial balance. Let's identify it, 3,200,000. Therefore, cost of sales, 3,200,000. Okay? That's the given figure. Now you ask yourself, why am I working with those figures in brackets? Because, grade 12s, for everything that you show, you are awarded a mark. And I'm sure you don't want to throw away these marks. So show all calculations in brackets. Right. We were busy determining the cost price. And the cost price, we know, whatever we want in our calculation must be on top. Not inside, on top. So 100 over my selling, which was 150, times my actual selling price. Aha, seems familiar, doesn't it? Yes, ASP stands for, you guessed it right, Ashraf Patel. And what was my actual selling price? My actual selling price was 15,000 Rand. Okay, let's do that one. And our calculation would now be 100 times 15,000 divided by 150. Something wrong there. Divided by 150, and that is equal to 10,000 Rand. Okay, what have we determined? The 10,000 Rand tells us that we have determined our cost price. Now the cost price, we need to make an entry for it. What is the entry? Watch. In terms of my double entry, a debit to trading stock. Why? Trading stock is being returned to us, and a credit to cost of sales. So if I'm crediting my cost of sales, what does it mean? I'm decreasing my cost of sales minus 10,000 Rand. Okay. So if I look at the transaction now, I ask myself, what have I done? I've made the entry, two entries, one for the selling price, one for the cost price. I'm also told the stock was then returned to the suppliers, but no entries have been made. We'll come back to this one. If we get to our trading stock adjustment, we'll get back to this one here. But just keep in mind that we also have to make an entry in our trading stock account, so that we don't forget it. Let's go back to trading stock. And in my trial balance, remember what I'm saying? Open up a bracket and say plus 10,000 Rand. Okay, that was the return of the trading stock from my customer to me. The trading stock was returned to the supplier minus 10,000 Rand in my trading stock again, showing me the zero effect. Stock was returned to me, I then returned it to my supplier. Plus 10,000, minus 10,000. Okay. Next adjustment. A debtor M Spark was declared insolvent. His estate paid 40 cents in the rand. 450 Rand was already received and recorded. Write the rest off as irrecoverable. I'll give you a minute to sort it out. Go for it. Right, let's see if you've got this adjustment correct. Number one, the debtor was declared insolvent. His estate paid out 40 cents in the rand. The 40 cents in the rand, 0.4, remember 40 cents, is equal to the 450 Rand which we have received already. What are we trying to determine? We are trying to determine what was the balance that we have to write off as irrecoverable. So certainly that would be 0.6. Why? Because if we received 40 cents in the rand, the 60 cents in the rand is the irrecoverable amount, the bad debt, which is equal to my unknown, right? Let's do the maths on this one here. And what we're going to say? We're going to say 450 times 0.6 divided by 0.4 is equal to 675. Okay, we've got our 675. What is the 675? The 675 grade 12s is your bad debt. It's the amount that you're not going to get back. It's the amount that you have lost. Double entry. A debit to bad debts. Reason, it's an expense to the business, and a credit to debtors control. Okay, now, if I go to my adjustments, under my bad debts, open my bracket, step number one, identify, did I have a bad debt prior to this one year? Certainly I had, 12,100. Therefore, I take my amount of bad debts, 12,100, from where? From my pre-adjustment trial balance. What do I add to it? What was my entry? My entry was a debit to my bad debts, a credit to debtors control, an amount of 675. Therefore, alongside bad debts, I say plus 675. Clear? Right. Let's go back and see what's the next adjustment. Obviously, coming back to this one here, the entry regarding debtors control, we'll come to it. You'll see we will keep this one in mind, that we have to do something to our debtors control, but let us do it now so that we don't forget it. When it comes to debtors control, remember there's a 675 that we have to take into consideration. so we make a note of it there. I think that's a much better system, so in that way, we don't forget what we have to do. Okay, on the 28th of February 2014, 2,400 was received from J. Jones, whose account had previously been written off as irrecoverable. The amount was entered in the debtors control column of the CRJ. Right? You got a minute. Well, guys, you must have noticed that there was an error. Why? When there's a bad debts recovered, we debit bank and credit an account called bad debts recovered. That's correct. What did we do? This was entered into the debtors control column. In other words, look at the entry. I want you to identify what has happened. We have debited bank with an amount of 2,400, and we've credited debtors control with the 2,400. Clearly, you can see your error. This does not belong in the debtors control. It should have gone to bad debts recovered. Let's correct the error. Double entry, a debit to debtors control to the amount of 2,400 to do what? To cancel that entry. At the same time, you would now credit the correct account, which is bad debts recovered, and the amount is 2,400. What's my contra entry? A debit to debtors control and a credit to bad debts recovered. In this way, you can clearly see what you've done. You've now corrected the error that was made prior to this year. And you go immediately to your debtors control, remember, and you say debtors control plus 2,400. Remember, you're correcting your debtors control. It's not impacting on your income statement, but it may impact on a future adjustment. And at the same time, you go to your answer book, and in your answer book, you got your bad debts recovered. Under other operating income, you've got bad debts recovered. Now, please, guys, you will not abbreviate in the exams. You will make sure that you write it out in full, and the value of your bad debts recovered will be 2,400. Okay, I hope that is crystal clear. What we're going to do is we're going to take a quick ad break. We're going to refresh, and we're going to be back with accounting in a split second. Okay, grade 12s, you will notice that I did not follow the adjustments as they are appearing there. I'm taking amongst the adjustments which I feel have a little bit more of a challenge involved to them, and we're going to be discussing those so that you are able to handle these if they appear in your exams, right? The one that we're going to be dealing with now is the rent one. And this one appears more than often in the exam papers. So let's have a good look at it, and let's make sure that we understand it. Right, it says here, the rent has been paid 3 months in advance. Okay, so already you know that you're dealing with income, or in this case, rent paid. We have paid rent in advance for 3 months. Keep in mind that your financial year is 12 months. The monthly rent was increased by 1,250 on the 1st of November 2013. Right. How do you go about answering an adjustment of this nature? Step number 1. The new rental of 1,250 is applicable for how many months? That's the first thing that you do. The increase, we're only working with the increase now. What was the increase amount? 1,250, and it was paid on the 1st of November, and we've paid 3 months in advance. If you go back and see, what was your financial year? Notice your financial year ends on the 28th of February 2014. So, if we've paid from the 1st of November, right? So we've paid November, December, January, February, and we've paid, so let's write this down so you can see it. We've paid November, we've paid December, we've paid January, we've paid February. So this would be my financial year. Can you see it? So it's November, December, January, and February. But we've also paid 3 months in advance. So that means we've paid March, April, and May. Okay? March, April, and May. Now, step number 1. Determine the number of months for which the new rental, the increased portion, must be taken into account. So that's 1, 2, 3, 4, 5, 6, 7. Multiply that by 7. Okay, let's do that on our calculator. So we got 1,250 times 7, which is equal to 8,750. Okay, now we tell ourselves, right, what was the original amount that we had? Let's identify it. We've got it here. So it says here, rent income 234,950. So obviously, when they said, the question said the rent was paid for 3 months in advance, it was meant that our tenant paid us 3 months in advance. Okay, so let's get back to the amount that we have identified, and that amount was for rent income, which was 234,950. Okay. So it's 234,950. Right. Now, step number 1. Remove the increase minus 8,750. Why? You want to make sure that all the months in the spectrum are equal. At the moment, some are more than the other, so we couldn't just divide by a constant. We need to find out what was the amount before or prior to the increase. So that's for, we do this here. We say, fine, it's 234,950, 234,950 minus your increase of 8,750, and this will be equal to that. Divide this figure that we get by 15. Why 15? 12 months of the financial year plus 3 months in advance. Therefore, divide that figure by 15, and your answer is 15,080. What is the 15,080? The amount of rental prior to the increase. Okay, add back your increase of 1,250, and this will give you a figure of 16,330. Multiply that by the 3 months that we have received in advance, 48,990. Immediately you tell yourself, 48,990, what am I going to do with it? This is what I'm going to do with it. 48,990 alongside my rent income. What's my double entry? A debit to rent income minus 48,990. This was the calculation that would carry the marks. Obviously, you'd have to put in the amount for your rent income. We know where we're going to get that figure from, don't we? There's our rent income figure of 234,950. So obviously, that 234,950 would appear there, and you're going to subtract the adjustment, a debit to rent income and a credit to income received in advance. Okie dokes, let's look at the next adjustment. Interesting one. Let's take a look at this one here. I'm going to give you a minute to look at this one here in particular. Okay, guys, consumable stores, but look at the wording. You always remember, I've said this before and I'm saying it again. R, T, F, Q. Read the full question, okay? What does it say? It says here, consumable stores used 39,000 Rand. Notice, you must have seen sometimes where they give you consumable stores on hand as a figure. So therefore, this means that when you are working in your answer book, when you're working with consumable stores, immediately, what will you do? You would take the actual amount that was used, and if we look at that figure, it said there 39,000 Rand. There goes 39,000 Rand. Therefore, when you're working in your answer book, immediately you put in the figure here, consumable stores, 39,000 Rand. They are telling you the actual amount of consumable stores that had been used. Obviously, the calculation would entail putting in the balance from your trial balance and then subtracting the 39,000 to tell you what you've got left over. But in this particular case here, you are doing the statement of comprehensive income, and therefore, what you would do is look directly at the amount that has been used. Now, there's another interesting adjustment here, which I think we need to discuss, and it's this one here. Right. It says here, the depreciation in equipment is calculated at 15% per annum on the cost price. This equipment is very old and will be replaced in the near future. Now, let's look at this here. Look at your equipment. The balance is 760,000 and it has an accumulated balance of 650,000. Meaning what? If I take my 15% per annum on cost and I say, fine, let me calculate my depreciation, which is 760,000, right? 760,000 is my cost price. Remember, I use art, amount, rate, and time, times 15 over 100, times 12 over 12. And if I go to my calculator and I say 760,000 times 15 will give me a figure of 114,000. Okay, now, if that is the case, look at my accumulated depreciation. It has a balance of 650,000. So therefore, if I take 650,000 and I add 114,000, let's do that. 114,000 plus 651, 2, 3 will give me a figure of 764,000. Now, what do you notice? You notice that your value of your accumulated depreciation would be higher than the cost price of your equipment. And this is not possible. Can I say that this asset is worth minus 4,000 rand? Certainly not. What do we do in a case like this here? Simple. Take your 760,000, right? And ask yourself, what is the maximum depreciation that you can write off? Okay? Now, obviously, you want to be left with the carrying value of 1 rand. And therefore, you take your 760,000 and you tell yourself, take 760,000 here, 760,000 minus the 1 rand you want to be left with gives you 759,999 minus the accumulated depreciation, and the accumulated depreciation in this case here was an amount of 650,000. Therefore, you are left with a figure of 109,999. What does this mean? This means that the maximum depreciation that you can write off is 109,999 rand. Once again, let me recap this particular adjustment for you. Your normal depreciation that you were supposed to work out amounted to 114,000. But because this will result in a higher accumulated, that is not possible. You cannot have an asset with a negative value. Therefore, discard that amount. Don't look at it. Ask yourself, what's the maximum that I can write off? If I've got 650,000 accumulated already, right? And I want to be left with a carrying value of 1 rand, then the maximum depreciation that I can write off is 109,999 rand. Well, grade 12s, we've gone through as many adjustments as we could. The onus is on you to do the rest. Remember, the secret to accounting is practice, practice, and practice some more. Aim for the moon, guys, because perchance if you don't get there, definitely you will be a shining star, an accounting shining star. Until the next time, keep your feet on the ground and be good. Cheers.